Um, okay, so welcome to the stream. It's Q&A stream. So essentially, the point of this really is to basically just answer your questions. There's a backlog of questions on eToro from the post that I put up earlier today, this morning. So I'll answer those ones first. If you haven't gone to read them, then maybe consider looking through those before you ask any in chat. But I'll answer questions from chat afterwards, although there's not too many people in here this time for this stream. So for whatever reason, maybe it's too hot and everyone's outside. But yeah, I'll try and get through them. I know there's loads of new copiers as well, so I'm probably going to spend, if I don't see the questions after reading through the ones on eToro, I may include a short bit about copying, how to copy, when to copy, how much to copy, how it works and everything like that as well, just to make sure that that's in there for newer copiers or people that are considering copying, people that are considering adding funds or removing funds or anything like that. But I imagine there will probably be some on my post on eToro as well. So yeah, with that all being said, obviously none of this constitutes financial advice. I don't know your personal circumstances. You invest at your own risk, and copying carries high risk. CFDs carry even higher risk. You get the picture. So yeah, keep that in mind as we go through questions and answers. Okay. I guess I will switch my screen. There's not too many questions on eToro either. Normally I post the Q&A a little bit earlier in advance than I did this time. So to be honest, it's probably my fault, but we'll have a look and see what's being asked anyway and try and get through them. Okay, so here's my post. If you're very quick, then you could still add your question onto the end if you want to. But once I reach the end of this, I won't be answering more questions from this thread. So I've opened up everything here and I'm going to start going through the questions. And again, if you want to ask a question, feel free to put it in chat after I've gone through these ones. So this person's asked, and he's got a lot of replies, so I feel like he's probably got the answer somewhat already. We'll see how correct they are. Normally, people give pretty good answers. So let's see. I wonder if the minimal amount for adding more funds to your copied portfolio is raised to USD 200. Last month, I can copy this with a lower amount since I add funds every month to your copy portfolio. Yeah, so actually, until the copy block was lifted, it made sense to add funds whenever you wanted to, pretty much, and it didn't really matter how much you added because the funds that you added essentially just went into a kind of pile of cash, and then the next time I open a trade, it would open it proportionally with ever so slightly more money, depending on how much you added to your copy. But now the best way to add funds now that I'm not copy blocked is usually going to be copying open trades. Because it means that your funds get to work much more quickly, even though some of the positions might not be bought at a perfect time, especially at the moment, with earnings and things. Maybe you could have you could be copying just before a bad earnings report, and I would sell at maybe break even or a small profit, and you would sell it for a loss because of when you bought it. But generally speaking, the effect of that is not going to be as major as the effect of waiting for a long time for your funds to be invested, because you have to wait for me to close every single position in the portfolio and reopen those positions if you don't copy with open trades. And because of the position sizes that I have and the minimum trade sizes on eToro, generally I advise only copying or adding funds with my minimum recommended amount, which is $600. And the reason for that is that it basically ensures that you are copying with enough money that you will always be able to open a new trade when it does get opened by me. So yeah, I'm not sure if everyone's answered this correctly. Yeah, I mean, this guy's pointed it out. So hopefully, and yeah, this guy has pretty much correctly said $500. I mean, I say $600. Actually, that's got quite a big margin for error in it, so it allows for the portfolio to draw down and for things to go badly, and still allows enough breathing room that you should still be able to copy all positions. So that's why I set it at 600. Technically, you can do less than that, but if you're doing that, then you are taking slightly more risk of potentially things not opening if the portfolio does draw down a bit. So something to keep in mind. And thanks to everyone that responded with these replies. Next question from Gareth Lim, 92. Hi Jay, your view on the global economy after the announcement of the CPI data, stock markets, crypto markets, and the reaction so far. So obviously, it's you know the CPI data has been driving markets a lot recently. I actually have it open in a tab here because I was obviously looking at it. So July's numbers just came out. And you can see at the very top here. So this is basically the percentage change from the previous month's data. So you can see that actually July is pretty much flat against June. So inflation in the US is looking much better. Obviously, this consumer price index. So it's not, there's other indexes you can use as well to try and measure things, but this is a pretty good overview. And I think the kind of the real big takeaways here is what's been going on with energy. So if you look at oil and gas, gasoline, so like heating and stuff, these are really the things that are pulling it down. Energy generally is the thing that has dropped dramatically here. So that's really the kind of the major thing. And I think actually we'll probably see if this does kind of continue, and if we see next month come in like this as well, we may actually see this start to impact markets in Europe and the rest of the world as well a little bit, especially in Europe, because if essentially, if that number's dropping, then that means that either more supply has come online or demand has decreased in the US, or a combination of the two. And so the prices are falling for those things, and that means that the US probably will be importing less from, especially given the kind of geopolitical situation, less from the Middle East. And that frees that up for Europe to then buy it instead. And obviously Europe are pretty desperate for oil and gas at the moment from anywhere that isn't Russia, given the situation that's going on with the war. So actually, like, really the biggest thing to take away from this isn't even, like, in my opinion, the fact that it's kind of flattened, although obviously that's really major news as well. And people were hoping that would be the case. But it's why it's flattened, which is really driven by those things. There are a few other kind of highlights as well. So, like, used cars, for example, has decreased, and really the trend in, like, the growth in this segment started way back in the pandemic. The demand for that increased dramatically. Demand for new vehicles is still quite high and growing, which is a good thing for the US, I think, and for economies generally. But I think it's probably still a bit too early to read too much into this. Markets have obviously reacted very, very positively. We've seen them rally again off of this, and they rallied off of last month's numbers a bit as well. And off the kind of Fed commentary afterwards, really, that the data they were seeing was looking positive, and that seems to still be the case, but it's probably still a bit too early to really read into this, because it takes a lot of time for these things to kind of filter through to the economy. And I guess that's the other thing I would say about the fact that it's energy really that's leading this loss, is that will trickle through to pretty much everything else in here. If you think about food and utilities and cars and all of these other different sectors of the economy, pretty much everything relies on electricity and on gasoline for deliveries and things like that. So as this decreases, it takes a while before we actually see those price decreases properly dissipate through the market, and then the people who are saving that money have more money to then spend on other things, or it's improving their margins for the products that they're creating and selling. So I guess that's that's the key kind of takeaway. Things are looking pretty good overall, but I would still say it's wise to remain cautious. Not so much on the US, like this is looking good for the US overall, but I think given the context of the energy crisis in Europe, which is being worsened by the current weather, we're going to have to kind of wait and see how things unfold, because actually we could see some contagion going the other way, where things are so poor in Europe that actually begins to then affect the US as Europe starts spending less. And obviously that will affect trade with the US and the rest of the world. So that's kind of my view on it. Hopefully that answers the question. I saw that got a lot of likes, so I'm guessing a lot of people wanted that answered. Good to see, though. Good to see people liking other comments to try and make sure that there's good coverage on this kind of stuff. I guess the only other thing I would say, actually, still on that subject, is obviously there is now kind of a growing expectation that the next Fed rate hike will be slightly lower, possibly somewhere in the region of 0.5% instead of 0.75. Again, I wouldn't go too crazy on it. I know that they have been signaling on it, but until we really see how it impacts the rest of the markets, it's a bit too early to try and move on that. I think rotating fully into growth right now would be a mistake, given what's going on in the world. So yeah, keep that in mind. Do you think the bottom is already in? How long do you think the bear market will last? I'm just asking your opinion. I know you don't have a crystal ball. Good to know that he knows that I don't have a crystal ball. So, how long will the bear market last? I mean, it's a bit like asking how long is a piece of string, really. But I think the first thing you need to do is, again, separate by regions. Things in Europe look much worse than the US, for example. I mean, there are some regions of the world that are really not in a bear market, especially the Middle East and a lot of the regions that are very self-sufficient on oil and gas and electricity generation as well. So even countries like France, for example, are in a much better position to handle the energy crisis in Europe than their neighbors, because they have produced the majority of their power from nuclear. Sorry, I'm coughing a bit. I don't know what's wrong. My voice is going already, so I might actually need to go and get another drink in a second and try something that's a bit more watery. Because currently I have a can of an orange flavored soft drink, so not sure if that's really doing the trick, but I'll check and I'll see how it goes. So yeah, the bear market, I think, in Europe, to be honest, I think with winter coming, and I've said this in the last two earnings, really, in my last two updates for Q1 and Q2, I really think that Europe is going to have a very, very tough winter. There's a brilliant Bloomberg article out at the moment, actually, that's talking about the impacts of the weather on this. And, it's hurting the nuclear plants in France that I just mentioned. The temperature of the water in their rivers is high enough that it's essentially causing problems with them cooling down their reactors. So they're having to dial back their reactors a bit as a result, and not producing as much energy as they would like to. And that has knock-on effects on other countries like the UK, which import some of that energy. Likewise, we've got a similar kind of situation in Norway, where they use pumped hydro for a lot of their electricity generation. And essentially the water levels have just gone down, and that means that there's less for them to pump, and they can generate less power as a result. And again, they are exporters of energy usually. The same is true for Germany. Germany is in a position where they're increasingly relying on coal. They have a very large coal mine in pretty much the center of Germany, I think, actually. That's mining brown coal. It's actually one of the worst types of coal you can get, so it's pretty bad that they're doing that in the first place. But you know, they're in a situation where they kind of have to, and most of the coal that they use in their power plants is actually sent through the river system and canals up the Rhine to the different power plants. And as the Rhine has dried out from the hot weather that we've had in Europe, the water levels have dropped and they can't get the coal to where they need it to be. So again, you know, there's disruption to them generating electricity, and this is all increasing the demand for gas, especially, but also oil. So yeah, it's a pretty poor situation there, and you know, I don't see an end coming anytime soon. In the UK, the cost of electricity is incredibly high now, and it's due to rise again, I think, in October, roughly double. It's already doubled once. In Norway, as I mentioned earlier, I believe I'm correct in saying that the energy prices in Norway have already increased by over 900% for most people. So yeah, it's quite a poor situation, and really I think this is the thing that is going to be driving the bear market, because electricity is just such an important requirement. I mean, oil is also obviously very important, but I feel like electricity is perhaps more important than oil these days in some ways. I mean, obviously oil can be used to generate electricity, but yeah, it's a bad situation, and there's just no real easy solution to this. And as winter rolls around and we start seeing people turning on their heating, I can only really see things getting worse. And I think, you know, Putin knows this and is hoping to use this as leverage to get a good deal for negotiating peace, or for potentially, you know, stopping Europe from sending so much support to Ukraine, and you know, maybe using that as I guess ammunition or fuel for their economy to kind of drive their war machine forwards, which is all, you know, incredibly sad, really, that we're even in this situation to begin with. Because I do still think that actually the majority of what we're seeing, although there's this kind of narrative that most of this inflation was caused by the spending that happened during the COVID pandemic, I actually think that in Europe especially, most of this actually really does stem from what's been going on in Russia and Ukraine. So yeah, it's bad times, but that doesn't mean that it's necessarily going to be a bear market. Markets tend to bottom out before the economy does, and before people really start spending again. Markets are always trying to think forward and price in the future, and generally that's around 6 months into the future. Obviously it varies depending on how accurate the market is able to be and how good they are with their crystal balls. But I think we're still too early, really, when you look at this. And I think in 6 months' time, we're going to be in like January, which is basically going to be the peak of that poor kind of performance in Europe, where Germany is going to have to almost certainly cut back on the amount of gas that they allow industry to use. I mean, there's actually even discussion about cutting back on the water usage for industry in Germany now as well, because of the water shortages. So I think it's still a bit too early, and this is perhaps a bit of a bull trap. So I think maybe we will see this come back down a bit. Whether or not that happens this month, next quarter, I'm not sure. But I think that at the very least we should stagnate. But realistically, I'm actually expecting things to kind of come down a little bit from here for the markets overall. Really long answer. Really long answer, but I hope that helps. Still not live. I'm definitely live. I hope you can see. Right, so let's move on to the next question. I'm really hoping that everyone's actually able to even see this. Good. So Chris Power, what is your opinion on stablecoins and platforms that offer interest on them? Wow, that's a really interesting question, actually. my opinion has kind of shifted a little bit over time in various directions. I think stablecoins are inevitably at some point going to get regulated out of existence. Obviously, the way they work generally is that they have a real kind of, not physical as such, but they have real reserves that back those digital coins, and they take that money and they go and invest it in various places. It could be in different kind of treasury notes and bonds. It could be in corporate debt. It could be in all sorts of different kind of markets. And obviously they're attempting to try and manage the risk and decrease. I mean, ideally they would like to be generating more interest on that money than they then give out for their users. And again, like it's complex for numerous reasons, right? So the actual stablecoins tend not to pay interest to the holders of their stablecoins. They just use the funds that they have that are backing it to try and generate a very, very small amount, so that they're making a profit from that. And then obviously, they're kind of paying to maintain their blockchain if they're on their own, or look after it on Ethereum or whatever they've built it on top of. The platforms then offer you interest on top of that. They are essentially taking your money that you've deposited with them. Normally they make you lock it up for a set period of time, and then they're going out and lending that to people. Now obviously, as interest rates have gone up, people are able to find more and more competitive rates in just their regular high street banks and in savings accounts and high yield accounts of different types and investments. So the kind of the desire to stake or lock up your tokens on a platform like crypto.com or Celsius or anything like that obviously decreases, because you can do it without using such a risky platform. There's so many risks involved. First of all, there's the risk of the stablecoin. Is it really backed by that money, or has there been leverage used in some way? And derivatives and strange accounting methods. There's obviously a lot of talk about Tether and whether they do that or not. I have my own suspicions and have done for many, many years of Tether. I tend not to use it. There's then the risk of the platforms themselves that offer the rewards, the staking rewards. So we've seen that with VOD and Celsius and many others that have, and even BlockFi, that have really struggled to kind of stay afloat during this, because potentially they offered too much in terms of interest, and they were hoping to earn that back at a later point, and they were really basically using cheap money and debt to fund the interest rates, with the hope of kind of user acquisition and then using other products to earn that money back. So I guess the short answer is that I think it can be very risky to use those platforms. But that being said, I do use some of those platforms myself. I have used crypto.com, I've used BlockFi and a few others. I do think that the risk has increased to some extent, especially highlighted by what we've seen with Celsius and with Luna. But at the same time, I think that actually when you take a step back and you look at the platforms that struggled, I think most of them you could have predicted would struggle. They were offering very, very high rates that were not sustainable, obviously. The one that probably surprised me the most was BlockFi. But yeah, obviously stablecoins have a real place in the market. They're a very useful tool. But I would be careful in terms of how you use them and where you store them, generally speaking. And if you are able to, and if there isn't too much price difference in your trading or whatever, then I would generally opt for the real thing over the stablecoins where you can. So that's my thoughts. Probably a longer answer than it warranted, since it only got 3 likes, but there you go. It's a complex kind of subject really to talk about. No question, just want to say awesome recovery these past weeks. Thank you and good luck. Well, that's very nice of you to say, Mr. Schmidt, but today was actually quite bad. We had some bad earnings today, so mainly small positions though, so it hasn't really impacted the portfolio too much. Not really a direct market-related question, which is fine. I said that I'm happy to answer pretty much any question as long as it's not too like crazy personal or strange. Now you're very keen on electric vehicles, and I was wondering what's your take on sustainable fuels like the direction F1 is going, which could have a faster and greater impact as it could work with all cars that are already on the roads. Also, thanks for the great work. Yes, so this is interesting, right? So I follow F1 a lot, as maybe some of you know. I will answer your questions once I've got through these ones in chat, by the way. So don't worry if I'm not answering them right now. So yeah, for F1, they're moving towards using sustainable biofuels, and essentially these are going to be fuels that are derived from crops that you grow in a field, and then you can process those and turn them into fuels, and potentially some of them get blended with normal fuels as they are now. So it's not actually really fully sustainable, as it were. Like it's still producing greenhouse gases and stuff, and it would do that anyway, even if you're just farming it. But batteries also, have that kind of a problem, right? Like the electricity needs to come from somewhere. And yeah, what's interesting about F1 specifically and about this technique is that I'm yet really to see anywhere that's actually doing this where it isn't a blended fuel mix. And I believe I'm correct in saying that with Formula One, I think it's only actually about 30% or so that is biofuel, and it's still then mixed with other kind of more traditional fuels. And then what they're doing is they're just carbon offsetting the production of those fuels. So while, yes, that's perfectly legitimate, sustainable method for F1 to go, really it doesn't help the car industry very much, because normal people, when they go to the petrol pump and fill up with fuel, that fuel has not been carbon offset by the companies that are doing that. If anything, I would say that actually in many ways F1 is doing this as a middle ground, because they do not want to lose their large kind of sponsorship deals that they have with some of the large oil companies like Aramco and such, Saudi Aramco. So yeah, you could argue that it's greenwashing by Formula One in many ways. And the other thing I would say is that even if it was coming 100% from crops that are grown and then turned into biofuels, those biofuels are not really viable for the scale of fuel that we use. They use an awful lot of land resources, a lot of water goes into it, still a good amount of labor goes into it, fossil fuels to actually harvest them and process them and everything else. And essentially it would have to eat into the land that we use for growing traditional crops and for animal agriculture as well. So it's just simply not viable overall to do that. If anything, it could be used for aviation and things like that, where it's much more difficult to use something like batteries because they're heavy and planes need to fly. So, batteries aren't very suitable for planes really, but yeah, I think that there is some, you got to be very cautious when you look at these things in terms of the real underlying impact of these things. Yeah, so you can see like 100% sustainable, fully synthetic. So I'm not sure about the fully synthetic, but maybe I need to go and double check with Formula One. But I know that certainly most biofuels are blended products. So yeah, I don't think EVs. I don't think EVs are a necessary thing for Formula One to do necessarily, but I do think that if they did do EVs, that would help the car industry much more than doing what they're doing currently. Because let's be honest, there are no companies left now, no real large car companies left that are planning to stick with fossil fuels. Pretty much every car company now is moving very quickly towards electric vehicles. There are still some that are also doing hydrogen alongside that, and certainly in trucking and things like that, they're working on hydrogen still. But even the large companies that were really holding out and avoiding going the battery route, such as most of the Japanese manufacturers, for example, even they have all changed course recently. and really done a full U-turn and switch to batteries because they can see the writing on the wall. The public like batteries. Batteries are easy to use, easy to understand for the public. The technology is already there and deployed and developed. The infrastructure for charging is being built. People are increasingly getting solar on their homes and everything. There's so many reinforcing factors for that, that to do anything else at this point would be an uphill battle. And really the only people that would be fighting that uphill battle would be the oil companies because it's in their interest to do so because of the fact that they are blended products mainly. That being said, I do still hold Formula One in my portfolio. So, you know. Can you give us an opinion about the NASDAQ and Ethereum? Have seen the bottom, or you expect another leg down lower than 11,000 to 10,000 on the first? And what do you think about the second after the protocol change? Thanks for the answer and for your efforts. Yeah, so I think the NASDAQ, certainly after today, it's done very well today. It did very well yesterday. I think maybe it's due another little pullback soon. I wouldn't necessarily say that I expect it to be falling quite down to the range of the lows. I think probably the bottom is in, but we may see a double bottom in the markets, in the NASDAQ at least. Yeah, I wouldn't be holding out for 10,000, to be honest. I would say that if you do that, you're likely to be waiting, well, possibly forever, with the way that markets work. Yeah, I would be cautious about that. At the same time, I wouldn't also say that I'm in a position where I think that buying the NASDAQ now is a good idea either. Generally, I think that in like the medium term, over the next couple of months, probably it's going to retreat a bit and kind of go flat. But I'm not super optimistic on it falling that low, I'm afraid. For Ethereum, I hold some Ethereum in the portfolio as well. Not too much. Just I think roughly 1% exposure. Probably more than that now because it's obviously appreciated in value. I think I was mainly buying it quite close to the lows as well, around like 1,000 to 1,100. Yeah, I'm really bullish on Ethereum, really bullish on the change. I think out of this crypto market, the things that will recover, as we always see, are the projects that do have largely some legs, or the projects that have, I guess, tricked enough people into thinking that they're good projects. But I think when you look at the top 10 cryptocurrencies over time, you can see the consolidation and the really the best projects are very slowly finding their way to the top of coin market cap and the rankings. So yeah, Ethereum, I honestly, I expect that when they do finally make this transition to proof of stake, there is a good chance that it will eventually flip Bitcoin. I do just genuinely believe that there is more utility. I think the ESG side of it is obviously very, very good for them. You know, the public, especially with what's been going on in the world with recent temperatures, pretty much globally, to be honest. I mean, you know, China's got floods and droughts at the same time, depending on which part of the country you're in. Europe is mainly suffering from major heat waves at the moment. Texas has been struggling with heat as well. That, you know, there's and also, you know, a lot of the northern states of the US as well have been struggling. And Australia, yeah, I mean the list goes on. So I think people are becoming increasingly aware that we do really need to take action on our emissions to try and at least slow down what's happening to the environment so that we can kind of build a few more defenses and better prepare our society for it. And Ethereum is a blockchain solution that's very, very, very popular, that will dramatically reduce its emissions and its impact on the environment when it does switch to proof of stake. So I expect it to do well because of that. I think that it will carry an additional premium in the same way that a lot of companies that position themselves as green also carry a premium. So yeah, I'm all for it, to be honest. It's my largest position in crypto on eToro. It's my largest position in crypto outside of eToro. And I think that Ethereum is going to do well overall, over the long term, certainly. Okay, I'm glad my voice didn't get any worse earlier. I felt like it was going, but but we survived. Now that copiers can join you, and it's possible to add funds with copy open trades, will you slow your habit of selling and buying again, which was very useful to get a copy as close as possible as yours when copy open trades was not available? The answer is probably yes, but not entirely, because that's not the only reason to do it. Cycling positions and closing them and reopening obviously helped people because they couldn't copy open trades when they were adding funds, but it also helps people when they are copying existing trades using the current kind of copy system, because the way it works is that it copies the original amount that you invested in the trade. So if I hold a position and it increases by 100%, as some of my positions in my portfolio have, what happens is that they are copying it with an amount that is only 50% of the size of what my current portfolio holds. So if I keep holding that and allow it to compound, the difference between my portfolio and their portfolio will grow over time. So I still need to cycle those positions until eToro changes the way copying works, so that it copies the current value rather than the original amount invested, which I believe eToro are working on changing to. I have no idea when. Hopefully soon, but until we see that, it makes sense for me to continue to cycle positions somewhat often. I mean, the other thing is that's worth remembering is that sometimes when I close and then open a position like that, I just genuinely want to take that 100% profit. I just want to take that out and have that in cash available, and then I want to reopen the position with the original amount and reset the allocation to that, because that's how much I want allocated. And the position had grown too far in the portfolio in its overall weighting. So reducing it is actually just something that I just generally want to do sometimes anyway. So yeah, it will slow down a little bit. But until we see some of those other things kind of change, it's still going to be something that I do relatively often. And also, I guess, to some extent, it almost acts, it kind of sounds a bit strange, but it almost acts as kind of sort of, it's not so much like a habit or like anything like that, but it's part of how I've been trading for years now. So, I'm kind of used to it, and it would feel weird not to do it. And I know that feeling weird is a very bad justification for paying extra spreads, right? Especially since eToro has just increased some of their spreads on the platform for CFDs, I think. But for me, like, I know that it works doing it this way, and I know the kind of returns I can get doing it like this. Obviously, I will try and reduce it over time, especially if they do make changes to the copy system. But I'm hesitant to go too crazy with it, because I do feel like it almost acts as a reminder for me to check up on my positions and the exact amount of profits and loss that I've got across them all, and when they were all opened and everything else, and the amount of dividends that I've received from them more often. So yeah, it will change, but I wouldn't expect any like really dramatic change in the short term. But in the long term, yes, it will decrease by a good amount, maybe come down by half or more even. But yeah, it's a good question to ask, so thank you for that. Meekud, hi Jay, what is your opinion on using currency trading as a hedge against volatility and the struggling stock markets? My opinion on it is that it's good for people that are good at it, and it's bad for people that are bad at it, and I am bad at it. It's hard enough to, honestly, I don't really understand how people can be quite so good at it, because I find the idea of, economics generally, right, is just such a broad field that is so all-encompassing. I mean, you really, it's impossible to model an economy perfectly. There's just so much data and so many behaviors to consider. And really what you're doing when you're trading currencies is trading economies. in many ways, but not just economies, but also, central bank policy and central bank policy of other countries, and trade and demographics of a country, population growth or decline, industry growth and decline, and what those countries are exposed to, the different geopolitical risks, who their neighbors are. There are so many things to consider when you're trading Forex compared to trading stocks. And it's not that those problems don't exist with stocks, but it's much more compartmentalized, and stocks are much more driven by what's happening with that individual stock or the sector that stock is performing in. And with a whole economy, you've really kind of got to consider so many different variables. So I think that it's very difficult to do that well, and it takes a lot of time to get good at that. And for me personally, I just don't think that's really worthwhile. I do keep an eye on the exchange rates, and especially the euro dollar, because of the fact that I have some good exposure to European companies. And I report my metrics during my Q2 performance report, for example. You'll see that I have added essentially some of the data about the currency performance, so that it's more clear of how those assets really perform, because at first glance it looks like they outperform the US, but when you actually consider how they performed against the dollar, they performed much worse because of valuation. I prefer to hedge with other instruments, to be honest. I just don't think that's something that I'm really good at, and I don't want to do things that I'm not good at. Maybe it would help me improve. Practice makes perfect, right? But I think it would just be a step too far for me. It's much easier to simply find some other stocks that are correlated, that I think are bad and are likely to underperform markets, and to short those to try and offset some risk. It doesn't obviously offset currency risk as much, but there's other ways of doing that. So, like many others, I'm interested in your view of the economy moving forward, and whether you think we may see any more significant declines. Is looking like a slow recovery now, as the trend changed, and showing possible reversal, especially the NASDAQ. If the NASDAQ breaks the 13,500, which it doesn't look like it's going to. I mean, I think it did actually break it for a little bit today, but maybe. Actually, I'm not sure if it did. I'm looking at my chart now on the other screen. Actually, yeah, it did. I think this move is about to run out of momentum, to be honest. I said that earlier when someone else asked a similar question. I think we're going to see probably it start to stall out for a little bit here, as we kind of, the good news has all been digested now. Earnings is still going, so there's still some room for some more bad earnings to come in, potentially. And obviously, I think it's all eyes on Europe as well for their data, and see what happens with that. But yeah, I wouldn't bet on it. I think that realistically, when you look at what's happened this year, the market should be down, right? Like, we shouldn't be recovering all the way back up. Things are much worse than they were this time last year, in terms of outlook, even in the US where it's not as bad. So I think probably now is the time to be a little bit more cautious, maybe take some profits if you did take some more risky positions, and kind of, refocus your portfolio again, prepared for another drawdown. Although, again, I'm also not expecting us to reach new lows. So we may bounce around somewhere in this range for a little while. What are your 2 highest conviction stocks which will bring the highest returns in the next 2 to 3 years? That is a good question. I'm going to have to open my portfolio to consider this. So here you can see it. Shows how much the value of my portfolio is. So when people were asking if I was going to deposit funds soon, the answer is no. When I first deposited after eToro raised their limits, I deposited enough that I felt would be comfortable for any real major drawdowns in markets, so that I would never get to the $50,000 mark where I would need to add new funds. So, and I don't add funds to go above this simply because of the fact that it would obviously disrupt everyone's copies. It would send everyone a message saying you need to deposit the same amount of money, or I would need to close every single position in the portfolio and reopen them, which obviously incurs spreads. And I just don't think that's disruption that's worthwhile for people. Just to kind of cover that, because I'm sure people are kind of looking at that balance and saying, why don't you have more? Or, you know, I don't know. They might be asking that, they might not. So yeah, generally speaking, the way it works is that my highest conviction stocks are the ones at the top of the portfolio. And like largely this is true, you know, Enphase and Ford and SolarEdge, you know, they are my highest conviction positions by a good margin, especially the first two. Ford, I actually wavered on a little bit prior to their last earnings, but their earnings came in so strong that actually, you know, I basically kicked myself for ever doubting in my view of Ford. And yeah, this should be $20 plus easily as things go. I'm not sure when, because you know it depends on overall markets, but Ford's in a great position, I think. The same is true of Enphase. Enphase have really delivered, despite supply chain headwinds and difficulties with tariffs and everything else. They've really broken into the European market very, very well. They've managed to maintain margins quite well. The outlook for solar is fantastic, especially rooftop solar and things like that, which obviously I think they will benefit from given what's going on in the world. Unlike SolarEdge, who are still doing well, but not quite as well. So yes, Enphase would be my highest conviction position. And to be honest, I think Ford would be my second highest. I'm also very, very keen on ABB. I've increased my exposure to them a bit more recently. I'm also very keen on Ubiquity, although I think they will have more short-term headwinds due to supply chain issues. They really are struggling to maintain stock levels. They're selling out of everything immediately, which is better than, you know, having too much stock that you can't sell, but it's still a big problem. Yeah, those would probably be the ones I would highlight. There's also a few that are lower down that are very high conviction. I really, really like Trig. It's just an incredibly safe, in my opinion, I don't want to say it's like completely safe, right? Everything has risk, but it's certainly one of the safest kind of plays right now, given the backdrop of what's going on with energy. Essentially, if you buy Trig, you just own a bunch of wind farms and solar farms and even some batteries and other bits and pieces like that, and you essentially just make money off them making money. It really is that simple. They just hold a bunch of assets. They don't directly really operate them themselves. Everything's essentially outsourced. So there's very little overheads. It essentially trades on kind of net asset value really more than anything else. And you know they buy and sell different farms as and when they decide it's a good time to, and they've got a good track record of that. Good dividends as well if you're looking for dividend income instead. Sadly, I can't impede. I would have this as a much larger position in my portfolio, but I've really been unable to get liquidity to open positions in it. So, you know, it is what it is. It's still there. It's a decent sized position, but it would probably be higher. But that's another one that I think is probably worth mentioning. I'm not sure what's going on outside, but someone's shouting. So if I kind of look down the bottom end, obviously, you know, the lower you go, the more speculative these positions become. So it's hard to say that you're really kind of high conviction if you're not willing to put lots of money behind it. Then I think it kind of speaks for itself that you're not really that high conviction. NIBE was one that I really liked. There's a few other companies that operate in the kind of HVAC system space and the heat pump space that I think are nice. I actually added Carrier Global to the portfolio today. I've traded them a bit before in the past, but you know, that kind of sector I would also say is something that I'm quite excited by. So yeah, I guess that's the answer to that question. Someone's asked if I invest in nuclear. I have some exposure to it, but not loads. I've considered it a lot, more than is healthy. I have considered it. I need to go find my post again so I can get back to the questions. see where we were up to. Okay. Opinion on Overstock and WBD. I think it's Warner Brothers, right? Yeah, Warner Brothers Discovery. So Overstock, honestly, I'm pretty bearish on it. I turned bearish on it some time ago. You know, they were trading a lot more based on cryptos than they were on the actual underlying business, and I think to some extent they were even neglecting the underlying business. And there is some disruption in that space going on, or attempted disruption certainly. So they've had some threats there. The good news is that they're obviously online focused furniture company, so that's gonna see more demand as footfall to shopping malls and things like that decrease because of people not wanting to drive and waste fuel and things like that. But at the same time, there's also the potential for people to stop spending as much and maybe hold off from buying themselves a new bookcase or a new sofa. So there's kind of tailwinds and headwinds for them there. But I think the crypto stuff, like, while I really like what they did and what they built, to be honest, it's getting to the point where if they were going to make it work and really make money from those things, they should have done it by now. And it's starting to get more concerning, especially as obviously the markets and are opening up more and more to this sort of thing. And you've got companies like NASDAQ and obviously Coinbase just made that absolutely huge agreement with BlackRock. I think it was BlackRock. Can't remember now. In terms of giving exposure to institutional investors and stuff. So Overstock's really going to start to struggle soon because, they're trying to do two very, very different things. One of them is, essentially the world of finance and decentralized finance and I guess centralized finance in some ways, and fintech kind of activities. And the other is being an online furniture business. And honestly, I think at this point they should probably just split the company in two. I think that's the sensible thing to do. And they could use the cash that it would generate from doing that, I think, as well. I guess the downside is that the market's not really in a good position to be doing that right now. It's just, raising money right now now's not the time to be doing it. But that's really, I think, what they should be looking at. And so, yeah, it's not a position I hold. It's not one I'm really too excited about gaining exposure to either. What's a good sync percentage from bull sheets? 100%, 80%? What percentage should I be worried I'm falling out of sync? Thanks for your time. Okay, yeah, so copy sync, like, I don't think you should take those numbers too seriously. And also there's a lot of other things to consider, such as like what country you're from. If you are from the Netherlands, for example, they have different rules on CFDs and cryptos and things like that. The same in the UK. For example, if I go on to Bitcoin or something like that, I can't open a sell position in it. The option is not here, right? I can't do it. Because it's not allowed in the UK with derivatives like that. So that means that potentially if your rules are different to the UK's rules on eToro, then it means that I may end up opening positions that you can't have exposure to. So that can cause desync. If you add funds or remove funds, that will cause desync. If you do not add enough funds when you start your copy or when you're adding funds, that can also cause desync. So, all of these things can cause it. Generally, I would say, ideally you want it to be above 90% really. And it should be, if you're not from one of those countries, above 90%. If it's not, then it may mean that you're not copying with enough, or when you added funds, you didn't add enough funds, or something like that. The solutions get complex to this. A good way of helping is to add some funds after you've started a copy with open trades. Adding some funds that are set not to copy open trades, which will essentially act as like a little reserve that will come into play when I open new positions. that can kind of help to make sure that you don't run into problems not being able to open new positions if they've been drawn down a lot. But there really is no solution. You're always going to have some level of desync, I think, and like it's easy to kind of blame eToro for this in some ways. You could say like, oh, why don't they fix this? But like, this is such a complex problem. There are so many different things that can affect this. The different tax agreements between countries for dividends and all of this sort of stuff can affect it as well, and the different regulations in different countries and how you add funds and when you add funds and if the market's open or not open. Like there's just so many factors that there's always going to be some level of desync. So you should expect that. Where was I? I've lost the question now. No questions yet. Just wanted to say a new copy here, and you rock. Thank you very much. Those who don't know English, use are direct. I don't know. That has confused me. I'm not going to lie. If someone here speaks Spanish or Portuguese, I'm not sure if it's Spanish or Portuguese, and knows what he said, or is it French? I don't know. I'm very bad at languages. But if someone wants to try and translate that in chat, then I'm happy to try and answer it. Last question. What do you think about NFT world and ApeCoin? I'm not really a fan of ApeCoin, to be honest. I don't really have any desire for it. And I'm not really a fan of most NFTs that exist. I think there is real utility in some NFTs. I think what Chili's is doing and Socios and the way they're working with football clubs and things is really exciting. The idea of kind of giving fans more of a voice and more of a kind of a buy-in to football clubs and letting them gain unique perks and benefits from that. That's a really cool use of the technology. I think doing it with some assets that are very sought after. So, for example, like splitting, paintings and fine works of art and things like that can be really cool. I think the project that was done by I can't remember the name of the artist now, where he drew lots and lots of dots, and essentially I know that Tom West made some videos about this project. He made 1,000 pieces of art. And they're all just dots of paint really on paper, and he made an NFT that links to each one of those 1,000 pieces, and essentially after a certain time he was either going to destroy the physical condition or destroy the NFTs. And I think that's a really cool kind of concept to have, I guess the kind of the associated provenance of the work that has been destroyed associated with your token. That's kind of cool. But equally, so is having the real thing. To be honest, personally, if it was me, I probably would take the real thing, I think. But there are some interesting things going on with it, but I think there's still a lot more interesting things to come. And I really think that when you actually look at most of these things that are art, that's just some drawings by artists that frankly most of whom aren't really that well known, and people trying to build these sort of gamified ecosystems out of it, I don't really see that as being the full utility of it. I think the real utility of it is when you can essentially tokenize really useful real world items, not so much art and things, but your car, for example, and then you can let people have shares in your car or whatever, and potentially earn a dividend based on how much money you make as a taxi driver with your car, or I don't know, things like that. There's lots of really cool things like that that I think could see utility with that sort of stuff. But I'm just not too worried about NFTs in terms of buying any. I don't own any NFTs, and to be honest, every time I see the various different crypto platforms and fintech platforms trying to advertise NFTs to me, it does make me cringe a little bit. Like they're just trying to cash in on a gold rush, and ultimately, I think that's what it is. It's a gold rush, right? So, yeah, I'd rather avoid it. Okay, I'm going to refresh just in case there's another question or two, and if not, then I'll start going through the chat. And there's not, so I'll go through chat questions. So yeah, if you haven't asked your question yet and you've been patiently waiting, feel free to start typing it in now. I will go back and kind of look from the top and see what questions there have been, and try and answer those in order. We're an hour in, so I'm happy to go for up to another hour, but it depends on the flow of questions. If things start drying up, then I'll stop and call it a day. But yeah, feel free to ask your questions. Hi Jay, do you think we have reached the bottom, or is this just the bear market rally? Yeah, so I've kind of already touched on this, so I'm probably not going to answer it, especially since you asked it right at the start anyway. It would have been one of the first things that I answered. The same with the US, the state of the US economy. I can see you're shorting Meta. Are you not optimistic about the Metaverse then? To be honest, I don't get it. Isn't the Metaverse just a game with a large emphasis on the social aspect? Yeah, I pretty much agree. Streampunk is a good question. And yeah, that's pretty much my thought process as well. You can describe an awful lot of things as metaverse, depending on how loose or not loose you want to be with the terminology. And generally, people are pretty loose with it, right? You can argue that Facebook and Instagram and even eToro are already metaverses, right? They are other kind of planes of existence where we all exist with our little avatars on this website and communicate between each other. And you can even argue that there's some sort of an economy of likes and dislikes and comments that goes on, and different people have different values in this world compared to the real world. You can fake it on Instagram and pretend that you're a billionaire and have millions of followers, and in real life maybe you're just someone that sits in your bedroom and uses Photoshop too much. And you can describe that as a metaverse. You can describe things like Sea of Thieves or Minecraft or GTA as metaverses. And, when the metaverse trend first started to kick off, you saw that term pick up massively in earnings calls, in gaming companies, in fintech companies, in social media companies. All of them were talking about it. And yeah, honestly, I think there's an awful lot of hype around this, when we're really yet to see what the actual real differences between a metaverse and a game, a game world, right? I don't think there really is one, to be honest. I guess the only difference you could argue is the scale. And I guess the next thing is that the cost to Facebook is substantial. They are absolutely throwing money at this. And I think that realistically, if it is about scale, then I think it's one of these areas that's going to have to be regulated, because it's very similar situation to the App Store markets that we saw with Android and Apple and with iOS and everything else, and their disputes with the likes of Fortnite and Spotify. Where these platforms are the only realistic way for consumers to purchase something, and as a result, that means that they have full pricing power, and they can charge whatever they want to the applications and games and tools and whatever music that is utilizing those marketplaces, and they can price gouge because of the fact that they become these monopolies. And you've already seen in Europe and in the US increasingly more and more calls for those platforms to be controlled and regulated, and you've seen those platforms start to bring down their pricing as a result, because they don't want to be regulated in that way, and they know that it's becoming a more major risk in terms of regulation. So, they're spending all of this money to do this. They don't really have a very clear monetization strategy for it. They just know that they want to try and be first and to try and dominate it. I think that there is a real kind of counterculture, and also when you think about like cryptocurrencies and blockchain and everything, and even gaming anyway, there are in many ways countercultures that are very much anti-establishment in what they believe in. And you've seen this a lot with some of the gaming companies that have tried to implement cryptocurrencies and gamify in various ways into their games. There has been a big backlash from the community. And I think you'll see similar with this. Facebook have demonstrated with what happened with the Cambridge Analytica scandal and everything else surrounding that, and how they use people's data, that they are not really trustworthy, and that they are happy to manipulate what you see in your feeds and in their metaverse. They're happy to manipulate that into whatever makes them the most money, and they don't really care about the health of that user. Things like depression and online bullying and scammers, pornography, and all of these sorts of things are rife on social media networks. Overall, generally, some are better than others, because it goes against their core motive, because their motive is profit, essentially. And if a scammer is willing to pay more money to put his advertisements in front of people than a legitimate company, then Facebook will happily put up those scammy adverts. And the same goes with YouTube. If you watch my videos on YouTube, you've probably seen some scam adverts before it. It wouldn't surprise me. If you're on Instagram and I've messaged you, chances are it wasn't me, it was a scammer, because Facebook doesn't really care about actually trying to fight that. How hard would it be for them to just check if someone's uploading the same image that I have on my profile? Not that hard, but they're not spending their money on that, right? They're spending their money on the next thing instead, rather than fixing those issues. So I think there's going to be real distrust of Facebook and other social media companies generally, with that sort of thing, and the control that it would mean that they have over the population in terms of freedom of speech and what content is real and what's fake news and what's not, and all the rest of it. So yeah, it's a very dangerous place to be investing generally. I think it's open to potentially being completely shut down by regulations, as we saw happen with Facebook's attempt with Libra to make a kind of stable coin. They were trying to essentially challenge central banks, really, because they're such a large platform, and as a result, they got very rapidly shut down. And I think it will be potentially the same situation with this as well. So that makes me very hesitant. And then you add on top of that the fact that Facebook is gradually losing users with demographic problems. They've been trying to copy TikTok with Instagram, and then Instagram users have been upset about that, and they've done quite a big protest across the platform about that. Increasingly the kind of Gen Z generation and millennials have moved away from Facebook. WhatsApp has had question marks about its monetization and things as well, and how they use your data, and privacy concerns, that some of which they've addressed more recently. I just don't think it's a great business to be investing in right now, especially since so much of their revenue is dependent on advertising at a time when we're seeing companies cutting back on their marketing spend. So yeah, that's why I'm shorting Facebook, or Meta, I should say. And to be honest, maybe I'll add to the position, since I know it's gone up a good amount today as well. Yeah, I'm pretty actually relatively high conviction on it, but obviously shorts do cost money. So it depends on if it's really worthwhile for me to do that. But I think it's a good hedge, and with the market where it is now, and as I said, I think it's likely to take a bit more of a kind of slowed downturn over the next couple of months, then yeah, maybe I will add more to it. That was a really long answer, so I hope you are still here for me to answer it. Okay. I was wondering if you ever reveal your eToro portfolio value publicly. I've seen a few PIs do that lately, but I can understand the reasons for not sharing it. Yeah, I do, as you've seen. Hopefully, if you're still here, you'll see that I did do that and gave a very brief explanation of why it's not higher. Hi, JM Spanish. Mate, you're amazing. Please can you give your views on GameStop? You know, I haven't looked at it much recently, but generally my opinion hasn't changed. I think trying to capitalize on crypto and things like that, not really a very sustainable long-term move, in my opinion. Um, I think their current business model obviously is not sustainable really in the long term. More and more people will continue buying their games through the direct online stores, such as the Microsoft Store and you know, stuff like that. And you know, Epic have their own store and such too. Yeah, I just don't see much of an existence for it unless it can very quickly pivot into esports and find a good way of monetizing that. And esports is a pretty competitive space, really. I think everyone can kind of see the potential in esports to make a lot of money and become a really big major industry. So, you know, there's some potential for them to do something there. But to be honest, I don't really see it happening when I look at it. And you know, I do sympathize with the movement on the short squeeze and stuff, but in many ways, I kind of think that's somewhat over. I also think in some ways that it's kind of dangerous in what it could do. You know, like you know, it borders on market manipulation at a certain point, and there could well be kind of nefarious motives behind some of the people that are promoting different stocks to try and squeeze and the way they go about it. I'm not necessarily saying that's the case with GameStop. And again, like, you know, I do kind of wish them luck because I like an underdog story as much as the next person. But it's not something that I'm investing in. It's not something I'm really interested in investing in. I haven't really, honestly, I haven't really looked at it since last year when things were kind of still evolving more on that front. So I couldn't really give you too much of a comment, although I think they've been, you know, missing earnings and underperforming a bit recently. Similar with AMC, you know, I don't think they're really in a good position, even though all of these retail investors tried their best to help these companies and you know, kind of prove the elites wrong. Ultimately, it's a very risky trade to try and take, and yeah, not something I'm too interested in doing. What do you think about the future of Crow and Flow? This is a good question. So Crow, I'm pretty bearish on now. I really, really liked it, but man, they they really have gone to town on cutting back on their product. And it just goes to show, I mean, it kind of goes back to what I was saying earlier about some of the unsustainable practices that were going on for the sake of growth. And really, the amount that they've spent on marketing, I think, is going to come back to bite them, and that's really what we're seeing. They've cut the perks of their cards about 3 times now, and their various kind of savings rates and things. They've increased spreads. They've increased fees for like adding and withdrawing and topping up your cards and stuff like that. They've absolutely been shedding users, I suspect, as a result. I mean, I, for one, downgraded from the card that I have with them and will be probably cancelling my card when my stake for that one is up. And then obviously selling my Crow because I'll no longer need it. You know, I made a profit on my Crow with my card. It came to eToro a bit late, which is why I didn't invest on it in eToro, because I just felt it was a bit late and that, you know, the valuation had become a bit fairer on it. So yeah, I'm not super bullish on that. Flow is a different story. I still think that fundamentally they're in a good place. Although I criticized a lot of the kind of NFTs we see, I think that some of the higher quality NFTs that exist are built on top of Flow. And I think that, you know, they're in a very strong position as a company that's really a project that's really dedicated to NFTs specifically, rather than everyone else who's trying to sort of latch it on as a sort of bolted on side second thought sort of thing. So yeah, I'm still pretty bullish on Flow overall. You know, the market conditions have not helped, to be honest. So it remains to be seen. It is a speculative investment, definitely, but I still hold all of my Flow. I've not sold any of it, so you know, I'm down on it currently as a result. But I'm kind of happy to just sit on it and wait and see where it goes. I've witnessed myself be right after giving up on things far too many times in crypto to now give up on it because it's had a bad year or whatever. Things like Loopring and stuff I was investing in years ago, way before GameStop started using it and all of these other projects started using it. The same even with Ethereum and some of the other projects like that. It's investing in Ethereum when it was $16. Can you believe it? So yeah, I'm not planning on really changing my position on that. But it's not a massive part of my portfolio. It is sizable in my personal crypto holdings outside of eToro. I don't hold it on eToro. It's not in this portfolio because it's not on eToro. Actually, mainly, I think if they added it now, I probably would really have to consider actually buying some. But it's not on eToro yet, so obviously I can't. Do you invest in oil or natural gas? No, I do not. I generally think they're pretty unethical, and I think you can make money pretty well from alternatives, such as nuclear or solar or wind or things like that, hydrogen. Some of which obviously still use oil and gas in some capacity or related to it or whatever. And maybe there's potential that I would invest in an oil or gas company if they were trying to transition away from it in a real meaningful way. But to be honest, most of them aren't. So I don't. Do you like Marmite? Marmite? You know what? It's been a very long time since I've tried Marmite, so I'm not really that sure. I think I used to like it. Yeah, I know it's kind of a black and white thing, but I think I've always just kind of thought it's okay. Like I'd have it. It's not my favorite thing. It's not my least favorite thing. It's okay. Do you believe that GameStop has more shorted shares than the amount of shares that exist? Quite possibly. Again, I haven't looked at it recently, but it's very possible. There's certainly shares that do. There's certainly stocks that do, and it's kind of screwed up that happens. And honestly, I really hope that solutions like what Overstock have been building, going back to the question from earlier about Overstock, those kind of solutions and the real kind of joining up of these global markets can really help with that to track what's already been bought to put short so that it shouldn't be possible for that. But there's always going to be these kind of leverage options that enable that, and as a result there's always going to be short squeezes. I think I don't think you can really easily get away from it in any kind of meaningful way. So yeah, that just is what it is, I guess. It's difficult. I'm not really sure the best way of regulating it, to be honest. I'm really not sure. Where are you on ad tech? Nowhere, really. I think ad tech has a lot of potential, but it's just not one of those areas that really interests me enough to invest in, to be honest. It's one of those things where I feel like I'd be listening to the earnings calls and finding it all a bit too dry. And I know that's coming from someone who listens to earnings calls from rail freight companies talking about how many cars of milk they've moved or something. I don't know if they do milk really. There's normally like coal or something like that, but or aggregates. But yeah, so I'm one to talk about boring earnings calls, but I'm still interested in that kind of stuff, and I just think the ad space is a little bit too boring, and also I kind of feel like in many ways advertising generally is one of those things that doesn't sit great with me ethically. Obviously, there is a need for advertising, but it is essentially a very poorly regulated industry. No matter what country you're in, it's still poorly regulated. There's all sorts of potential long-term mental health effects that advertisements have on people, and what's healthy and what's not. There's a reason that fast food advertisements are banned during kids' TV programs and stuff in lots of different countries. Any chance of turning the audio up? I mean, I think it's This, honestly, I'm not sure. But yeah, I'll try. I know people do complain about this on YouTube as well, and I'm not sure why it's low. Like on my system, it shows my audio as being high. So yeah, sorry. I really need to try and find a better long-term solution to figure out why my audio is as quiet as it is. But yeah, sorry, I kind of jumped around there. But yeah, no, ad tech, yeah, it's just not something that really interests me that much, and I'm just not, I'm not convinced by it, and it doesn't quite sit right with me. It's not something that I inherently think is unethical and inherently bad, but it's just an industry that I think is hard to predict. It's hard to really build a moat in. Yeah, I'm just not too sure on it, to be honest. Uh, did you get around to checking out the Steam Deck? Yes, after believing that you said Stream Deck last time instead of Steam Deck. Yes, I did check it out, and actually, it was much more impressive than most of Steam's products. Valve had a bit of a reputation for releasing stuff that's been rubbish whenever they've attempted a console of some sort or some sort of micro PC. They've always been bad, really. And you can argue that the Valve Index is different, but obviously. Well, I guess not obviously, but yeah, maybe that's the exception to the rule. Even the controller, I bought the Valve controller a long time ago, and I've used it like 3 times. You have your speakers maxed out. Yeah, I am sorry. I will try and look at what's going on with volume because people do complain about it on YouTube afterwards as well. And I just don't get it because on my system it shows it as being like maximum. So I'm not sure what else I can do about it. Yeah, yeah. I mean, I don't know. The Stream Deck, it looks good. Is it really going to make any meaningful impact? I'm not sure, to be honest. It's an uphill battle. I kind of, you know what? I mean, realistically, I really like the way the PC market is set up as it is. I like the fact that you can build your own PC. And there are lots of different types of cases and different types of fans and graphics cards and CPUs and everything else. And to be honest, like I would be more than happy if they brought out an even smaller motherboard configuration than the smallest. And maybe allow people to make their own small handheld devices and things like that. That would honestly be like amazing. But I don't really think it's very likely to happen. So we'll see. We'll see if anything changes on that front. But yeah, like I don't know what else there is to say about it. Really, I'm probably not going to buy one. But it actually did look really good, to be fair. From what I saw of it when I looked it up after last time. When you mentioned it. I think it was you that mentioned it. It might have been someone else actually, but I'm assuming it's you. Hey Jay, massive fan. What's your verdict on AMD, Intel, Nvidia currently? That is a great question. I have my portfolio open and you can see AMD up here. And if we keep scrolling, you may notice that there is an absence of Nvidia, which I've traditionally held for a pretty long time. And also Intel, which I sold off after their last earnings. I took a bit of a gamble, and at the time I was thinking, maybe I'm doing this too early in buying into Intel, and I think I was right. And I think actually, when now that I'm looking at their chart, I can't remember exactly when their earnings was. Let's just come up here and have a quick look on here. And see if we can have a look at Intel and see when their earnings was. Yeah, so it's here. So yeah, I sold in the following couple of days or whatever, and you can see that it's already actually been lower than those points. And to be honest, although it's rebounded a bit here because of what's going on with the markets, I wouldn't be surprised to see Intel continue falling. I really think they're in big trouble. I think they're a good distance behind AMD. Honestly, as bad as it sounds, one of the best things that could happen for Intel right now, and this is going to sound somewhat ridiculous, and obviously I hope this doesn't happen, but one of the best things that could happen for them is if China actually increased aggression on Taiwan and disrupted the semiconductor industry over there in TSMC, because obviously Intel are starting to build more fabs of their own in the US and stuff, and supported by the US government. And that could be good for them. And I'm sure that given enough time, they will find a way to kind of come back and become a bit more competitive again. But it's an uphill battle, and it's an expensive uphill battle. And it sounds like they're giving up on their graphics card stuff with Alchemist, which was honestly, I think, a potential savior for them. It would have cost a lot to establish themselves in that market, but once established, I think it would have done very well for them. It's sounding like they're going to scrap it, certainly on the kind of consumer gaming focused cards, and possibly even on the side of servers, maybe. It's really hard to tell, to be honest, but yeah, as a result, I thought, you know what, I don't think I want to be part of this. They've been selling off other bits of their company here and there with like storage and things like that. And I just think the CPU business, that they're substantial distance behind AMD at the moment, and I don't see them really resolving that anytime soon. So yeah, I just don't like them as a result, to be honest. I thought that they could start to turn things around, especially with the investment they were making in the graphics side of things, to take the fight to Nvidia, but they're not doing that. So yeah, that was enough for me to say no, I'm fine with getting out of this now. For Nvidia, so the main reason I got out of Nvidia actually was that I just felt like, and this was again towards the end of last year, the start of this year is when I got out of Nvidia, and I'd been reducing my position a bit before then, taking some profits. I felt like with Ethereum switching and with the potential decline coming to the crypto markets, as the bear market would set in, I felt like they'd see a lot less coming in from mining. I felt like as a result of less from mining and watching stock and inventory levels and stuff across the kind of gaming space, you could see that gamers were finally able to get hold of their cards again, and that demand was starting to get filled up. And after you fill up that demand, what's left really? The server side of things is going to take a bit of a slowdown because of the kind of global conditions, for global kind of macroeconomic conditions. So a bit less spending on that side of things, which is where they do have a good advantage as well. But on the gaming side of things, and also on the self-driving side of things, especially, that's really dried up. You don't hear very many companies talking about self-driving cars anymore, to be honest. And I think the reason for that is that everyone's realized it's really, really, really difficult and really, really expensive, and it's actually going to take a lot longer than everyone thought, myself included. Essentially the demand for their product is decreasing everywhere. They would have lost some pricing power if Intel had kind of stayed in the game, but they do still have some good pricing power, so that's kind of in their favor. And obviously the market will recover, but at the moment, I don't think it's a great place to be invested. I have considered looking at getting back into Nvidia again recently, but I'm still on the fence about it, to be honest. But they did miss on their recent earnings, I think, so, or gave poor guidance. I can't remember which it was. So I'm kind of happy to sit out for the time being. AMD, I still like AMD. I just think that they've got a good lead in CPU, and they are in a good position on the GPU side of things because of the fact that they supply to, they do the, what's the word? I can't remember now. It begins with an A. It's not a word, it's an acronym. For the kind of integrated stuff for PlayStation and other consoles. That's the thing that's in their favor, right? Partner with Sony and stuff, and you can be pretty sure that next time they bring out another console, then they'll get a bunch more sales, and margins are pretty thin, but it helps subsidize their work on the server side of things. Really, that's what I see it as. So yeah, very, very sensible approach by Lisa Su, I think. And yeah, I'm pretty happy with AMD. And the good thing is that because they don't spend loads of money on marketing, there isn't really as much wastage as you're going to find with companies like Intel, for example, on marketing side during poorer economic conditions. And yeah, Realtek. Yeah, I've looked at my boost settings and stuff. I'm pretty sure it's all fine. Like if I go speak to people on voice on Discord and stuff, nobody ever seems to complain about that. Maybe they all turn me up. I don't know, manually. Who knows? But yeah, I'll try and look at what's going on with my microphone because people do mention it every time. I don't know if it's like auto adjusting my volume or something, but I'll look into it. Looks like questions have dried up. Wasn't as much viewership for this one. Again, I think people are just kind of, there's a lot of people that maybe just don't want to look at markets because they're red, maybe. But I appreciate all of you that decided to come and watch live. I appreciate everyone that isn't watching live. Appreciate all of my new copiers on eToro. So yeah, thanks very much for tuning in. I'll give it a couple of seconds just in case anyone's got any final questions. But if I don't see anything, then we will call it here, which is a good time to call it, 1.5 hours. So. And, gives me a chance to go and look at the market some more and see what's going on. Yep, looks like everyone's happy. So thanks very much for watching, everyone. You can watch the recording of this on YouTube when I eventually upload it. Hopefully the volume isn't too quiet on there. I do apologize. And yeah, if you have any questions that you want to ask, you can always join my Discord server. If you type !Discord in the chat, then it will give you a link, or you can look below my bio, or you can look at what's written on. Actually, my Discord isn't written on the screen really, but yeah, you can find it through my other channels for the most part. But yeah, if you join the Discord, there's always some good chat going on there between everyone, talking about stocks and things. You can obviously ask me questions on eToro as well and follow my portfolio. You don't have to copy me. If you're not copying me, you can still have a look at my portfolio and ask me questions. I don't mind. That's it. Thank you very much for attending, and I will see you all next time. Thanks.